Hi everyone, welcome to another video. Today we are going to discuss inventory valuation. Inventory valuation means in a business there will be some goods left at the end of the period. These goods will be bought at different point of time. For example, we are preparing our financial statement from January to December. So during this period we will be bought different times, different type of goods at different price. That is important because in our economy there will be inflation. The price we paid in December, it will be higher than the price we paid in January for the same goods. So when we prepare financial position at the end of the year, in this case it is December, some goods will be there. That goods is known as inventory. We have to record that one as our current asset. So what should be the value? How we will record it? Today we are going to discuss the methods for calculating the value of inventory. So let's discuss what are the main methods for calculating value of inventory. The first method is FIFO. FIFO means first in, first out. Then another method, it is known as LIFO, last in, first out. There is another method also, weighted average cost method. That is also a commonly used one. So here we will be discussing FIFO and LIFO. FIFO means the value of inventory under FIFO will be the latest goods purchased. Suppose January to December, that is our financial year. If you bought a goods in January and February, that goods will be selling first. Which item came first to the business, that will be selling first to the customers. Or it will be given for, if it is in the case of raw material, that material will be, the first bought material will be given for production. So the left item or the closing value will be what? The recently purchased goods will be with the business. So first in, first out means the goods we bought at the early will be issued for production or it will be sold to customers firstly. The things left will be the latest goods we purchased. It will be just opposite in LIFO. Okay, so let's discuss one question. Here, Brinchton Metal manufacture aluminium product for the petroleum industry. So the inventory here it is raw material. The price for aluminium varies every year during the year. The following information was provided on 31st October 2017. Opening value of inventory actually 1500 at the rate of 10 ton. Then during the year they given information November to January, 3 months period they given how much is the purchase. Receipt means purchase. It is 10 tons at the rate of 1400. You can see here the rate vary 1400, 1300, 1250, 1200. So you can see this, the price of this raw material is actually decreasing, isn't it? So let's see how we can do this one as per FIFO. FIFO means first in, first out. So this is the format, simple format, date, receipt, issue, balance. So 1st November, how much is our opening inventory? They had 10 unit at the rate of 1500. So total amount just multiplied. Then during the year, first quarter, November to January, they bought extra 10 unit at the rate of 1400. Now it is the time to issue. They want to issue actually 15 units. It is in the question 15 unit. It is first in, first out. So we will be issuing the opening balance first. Then we will take from the first quarter purchase. So once again, for issuing, first we will take the opening inventory 10 into 1500. Then we will take 5 out of the recent purchase. So our balance will be 5 unit at the rate of 1400. Okay, this is FIFO method. So that's why out of latest purchase, we issued 5, the rest 5 we have. The next quarter, that is February to April, you can see 10 unit they bought and they want to issue 8 unit. That 8 unit, you can see this 5 is actually taken out of the previous balance, and they want 3 more unit that will be taken from the latest purchase. So the balance is how much? 7 unit, 1300. So like that this process will continue. When you see this screen, it may be a little confusing. When you practice, it will be very easy. So you can practice. Remember this step, the first step itself. Receipt we will write one by one. Issue will be, if it is FIFO, first we will take any previous balance, then we will take from the latest purchase. So as per FIFO method, the value of our inventory is how much? 4800. How many unit we have? 1200. So this 1200 actually the latest purchased goods price. You got the point. In FIFO, the value of inventory will be the latest goods purchased. Then you can see in LIFO the difference. Opening balance, no difference. See here, they want actually same 15 unit, but what they will do? First, they will take from the latest purchase, last in first out. Here in first quarter, lastly came 10 unit. That 10 unit they issued first. Okay. Then the rest they taken. This 5 is taken from out of 10. So like this, if you continue, you can see the difference. Here the closing balance is how much? 4 unit only, but the value is how much? 1500. In LIFO, the value of inventory will be the beginning. See, at the beginning, what was the value of inventory? 1500. So in LIFO, it does not show the market price. Okay, the first bought goods will be kept in the business. In the sense, by the value it will be kept in the business. So you can practice this question and it will be clear.